Good morning. You're with us here on a fresh new edition of Trading Hour. I'm Prashant. With me, my colleague Pavitra. Pavitra, hi.
Hi, Prashant.
Where are the rest of the gang?
Clearly on a holiday, taking full advantage of this 3-day week.
There were two others, right? There's Rima and there's
Surbi.
So both are off.
Both are off. I wonder what I'm still doing here.
So I'm the replacement for today, that is, and we'll take you through the next hour or so of market action. Well, things are on the mend as far as overall sentiment is concerned. We're up about 90 points. We were up 110 even 20 minutes ago. So there is a bit of a drop-off which has happened. The market, by the way, got to the 200-day moving average. It crossed the 200-day moving average. That is exactly pat at 17,500. So there was a throw over above it by about 20 points, and then now we are under it once again. I think our technical experts earlier were saying that around the 200-day, you perhaps will start to see some amount of selling, some amount of resistance starting to come in. Remember, it's also a holiday-shortened week. Tomorrow is trading, of course, but there is the RBI policy and a fair bit of opinion, sound and fury about what the RBI may do. A rate hike is being expected, but what will happen to the stance, liquidity measures, I think there's a lot of uncertainty around that as well. And then, of course, day after, which is Friday, it's once again a market holiday going into the long weekend. So for now, it's not a bad-looking screen at all. Some 90 points on the index, almost at about 17,500. Pavitra.
Yeah, and after that very weak handover also that we got, right? And a lot of the Asian markets are under pressure. The Japanese markets are down around 2%. Whatever's trading, there are most of them which are shut, of course. The advanced decline is looking quite good at over 3:1 right now. In terms of, stocks, it is a lot about the financials because we got a lot of the updates coming through. So you have Bajaj Finance, HDFC Bank, which are, gaining and holding up well in the green. On the losing end, also you have the likes of IndusInd Bank, which are, of course, again on the back of the Q4 updates, losing. You have Federal Bank, Bank of Baroda, Bank of Maharashtra. So a lot of those stocks in focus. For IT, it's quite split because a lot of the large cap names are actually at the high point of the day. So they're moving higher right now. But a lot of the mid cap IT names continue to be under pressure. So those ones will be up on your screen. We are seeing the impact of windfall gain taxes on crude, which is, and it is a positive. So for ONGC, it's holding up, but Reliance has moved to the low point of the day. And it is a holiday shortened week, but we have that big queue tomorrow, right? So we will keep ourselves busy.
Yeah, the RBI, which will take up pretty much the bulk of the day,
at
least, all the way till about 2:30 or so, the press conference, etc. Very closely watched. But Pavitra, we've been seeing these buying tactical rally, tactical surge kind of calls, right?
Yeah.
And I think more people are throwing their weight behind this call. Actually, the first time we heard this was S. Narain on the channel highlighting that he's expecting a rally because of valuations which have dropped off a little bit. Although he made it a point to say that he's not expecting a very large move or anything, but a decent sort of bounce. Now we've got the sell side coming in as well. So brokerages like Goldman Sachs, Bernstein, we highlighted what Morgan said on Monday. They're all saying that you should start to look to buy the dips now. Sonia is here with a compilation. Sonia, morning.
Morning. Thanks a lot for that. Well, as you rightly pointed out, the chatter to buy India has only gotten louder. In fact, in the last 15 days, or last 5-6 days actually, you have 3 big brokerages that have come out and said that India is now a buy. Goldman Sachs, Morgan Stanley, as well as Bernstein. So let me start with Goldman Sachs. Sunil Kaul, who's the India strategist at Goldman Sachs, put out a note where he said that the time has come now to accumulate the Indian markets, and the premise on which this buy call has been put out is largely the valuation argument. He says that it's a good time to be buying quality stocks which are getting at a reasonable price. The valuations of India are back to reasonable levels. The MSCI India index is now trading at 19 times forward PE, which is very close to their own assessment of what the fair value estimate is for India at about 18.5 times, and hence the buy call has come through. They also have a Nifty target of 20,000 over the next 12 months, which they have retained in this call. And in terms of sectors, they like banks as well as the cement stocks. So they are going with, the domestic-facing financials as well as the infrastructure and cement names. Venugopal Gare of Bernstein put out a note where he expects the Indian equity markets to see a quick rebound in the near term. Now, this is after 6 months of an underperformance compared to emerging markets. So he believes that the underperformance has now come to an end. He sees a room for rallies led by various factors, and it's mainly tactical factors, as you said, including valuations and a bunch of macro factors. He likes financials, real estate and cement. And finally, Jonathan Garner of Morgan Stanley had upgraded India to an equal weight a couple of days ago, if you remember. He says the narrowing valuation premium and a resilient economy is the rationale for the upgrade. And the growth will largely be led by the digital infrastructure space, the lending boom, the better demographics and domestic demand, which is improving. So the chatter is growing now on why India has become a buy call.
All right, Sonia, thanks a lot for rounding up what all of those brokerages have to say on India. This is the view that we've been getting across the board, you know, that considering valuations have come down and we have seen this kind of correction in a lot of the stocks, it might be a good time to start building positions. But with that, let's also move on and talk about some individual stocks which are buzzing around in trade. We have HDFC Bank, Bajaj Finance, Poonawalla FinCorp from, you know, the financial space, which are all doing well on the back of their Q4 updates. So Abhishek is here to round up all of the numbers for us. Abhishek?
Well, Pavitra, to start with HDFC Bank, a robust deposit momentum is seen. YOY growth of 20.8% is perhaps the best in last 11 quarters, and sequential growth of 8.7% is perhaps the best in last 20 quarters. Advances growth has stepped down a bit, coming in at 16.9% YOY, which is a 5-quarter low. However, sequential growth of 6.2% is one of the best in last 4 quarters. The CD ratio, credit deposit ratio, that's at 8-quarter low of 85%. But take a look at the CASA. The CASA momentum remains strong, which is the low-cost deposit momentum, growing at 9.6% quarter-on-quarter, and CASA ratio also improving on a sequential basis to 44.4% when compared to 44% in the previous quarter. If you take off the pool of loans that they give to HDFC Limited, the loan growth is at 16.94% YOY and a little more than 6.23% quarter-on-quarter. So direct assignment of the loans given to HDFC Limited is up 15% YOY and about 5% sequentially. For Bajaj Finance, the AUM growth has remained strong, which is a heartening point to see. So new loans are up 20.6% YOY, but they have declined 3% sequentially, largely a seasonal trend seen in Q4 in terms of quarter-on-quarter decline. So customer base is strong. It grew by 20% YOY and about 4.5% sequentially. However, the cross-sell rate is on the lower side, coming in at 6.7%. AUM growth remained robust at 28.8% YOY and about 7.15% sequentially. The quarter-on-quarter growth is perhaps the best in last 4 quarters. Calculation shows that the average ticket size has remained stable and seen single-digit growth both YOY and quarter-on-quarter. Deposit momentum remains strong, capital adequacy ratio remains strong, and liquidity has declined a bit by about 7% sequentially. Poonawalla FinCorp, the business momentum has remained robust due to strong disbursals. Disbursals are up 151% YOY and about 89% sequentially. So the AUM growth has come in at 37% YOY and about 15.7% quarter-on-quarter. However, the rundown is very fast. The AUM to disbursal to AUM ratio is at a mere 18.6%. Asset quality, both the gross NPA and net NPA ratio have come down, and liquidity in the balance sheet has also declined on a sequential basis. Back to you.
Okay, HDFC Bank, Bajaj Finance, Poonawalla FinCorp. Abhishek, thank you very much for running us through the pre-quarterly numbers from all three. Now we come to the windfall tax story. Now Reliance, ONGC, Oil India are all in focus after the government cut windfall tax on crude petroleum to zero. Now many are seeing this as temporary because oil prices, underlying crude oil prices have moved up quite sharply over the last 2 trading sessions. Sonal is here though with the details as they stand right now. Sonal.
Thank you so much for that. Well, yes, there has been a sharp cut. In fact, it has been cut to zero as far as the tax or the windfall tax on crude production is concerned, from 3,500 rupees per ton. Now, do remember the first time it was levied, it was back in July at 21,500 rupees. This has come in after we saw that sharp fall in crude prices in last couple of days. But do remember, right now, crude prices are above that $85 per barrel mark. The export duty on diesel has been cut to 0.5 rupees per litre versus 1 rupees per litre. And petrol and ATF, they continue to have nil special additional excise duty. Now, CLSA says that this is the first time in 9 months that it has been cut to zero. But still, at these levels, they are able to make realizations of around $75 per barrel. And that's the reason they have a buy rating on both ONGC and Oil India as well. Reliance's windfall tax is also at a record low for the company. So that's a positive for sure. But as I said, crude prices, they are above that $85 per barrel mark. So this looks like a temporary short-term relief because there is a possibility that government could levy it again in their next revision as well. And companies so far, they have been able to make realizations of $70 to $75 per barrel. Looks like that will continue to be government's policy, but we'll have to see which way things go. But yes, it is a short-term relief for oil producers right now.
All right, Sonal, thanks a lot for getting us the details there. The other stock that we're looking at is Bharat Forge. This one is down around 2% as the North America Class 8 truck orders have declined for the month of March. So Sonia is here with the details. Sonia, it looks like quite a significant drop.
It is. So both on a year-on-year as well as on a month-on-month basis, the North American truck orders are not looking that great. In fact, it's a decline of 10% year-on-year, a decline of almost 17% compared to what we saw last month. Now, the commentary that came in from FTR, which is the company that gives out these numbers, is that a lot of the orders were booked in Q3 itself. Hence, Q4 is starting to look a bit, on the lower side. He also mentioned that the capital utilization of the fleet in North America is quite strong. Demand continues to be very robust, but it's just a matter of timing, because of which, this Q4 tends to be a bit on the weaker side. So no alarm bells have been rung just yet, and hence you're seeing just a marginal reaction to the stocks, whether it's Bharat Forge or even something like a GNA Axles. But the bigger point here is that the demand for North American trucks continues to be very strong. There is a lot of order backlog as well, and they expect that in the new fiscal, the demand will be much stronger than what we saw in FY23. So overall, the views are positive, just that because a large amount of the orders were booked in Q3, Q4 is looking like it is on the lower side. Back to you.
All right, Sonia, thanks a lot for getting us those details on Bharat Forge's March numbers as far as the North America truck orders go. But with that, we are going to get into a short break. On the other side, we should focus from equities and talk about what's going on in the world of commodities. Welcome back. You're still tuned into Trading Hour. We're still holding up with an 85-point gain on the Nifty, but the mid-cap index is seeing some cuts like we've been pointing out. So that is around 0.2% lower. The bank's also slipping absolutely flat on that right now, just about holding up in the green. But let's talk about the world of commodities. Manisha is joining us, and today she's talking about precious metals. And Manisha, the gain really continues here.
Oh yes, Pavitra. So even as the crude oil prices are stabilizing, but gold and silver prices continue to run up. So much so that in the international markets, now we are holding well above $2,000 per ounce. Yesterday, we saw a high of 2,040 as well. And this is an all-time high for the Indian markets. We already have done 61,000 on the higher side too. So it's an all-time high in India, one-year highs in the international markets. The silver price is also trading at a 30-month highs right now. And we have seen in the overnight markets, gold prices gain up by 2%, silver by 5%. And this is the highest since April 2022 that we are seeing in sense of silver prices here. Well, the reasons for that is that the US Fed may not, aggressively increase interest in the meeting of May. The markets are anticipating the weak economic data to be the reason for that. If you look at the US ISM numbers, those have continued to slow down for the 5th straight month. Also, the dollar index trading at a 2-month lows is also a supportive factor. And then the investors now are weighing in the probability that 57% of a chance that in the meeting of May, there would be no rate hike from the US Fed. And everybody seems to be buying gold right now. Take a look at the money managers and the hedge funds. They are ditching bearish bets and they are creating longs as of now. This is last week's data that should come in on your screens, and this is from CFTC, which shows you on what the COMEX money managers really are doing. So when you look at the longs and shorts, we have seen longs increase, longs increase, shorts cutting down. So there is a short covering into the markets happening, and the net longs right now that stand in gold is at 99,000 contracts. It's a similar scenario for silver as well, where we have seen longs increase, shorts cut down. And when you look at the net longs coming in for silver as well, here as well, we are looking at 10,000 contracts as net longs. So whether it's gold and silver, the money managers clearly coming out of bearish positions, making long positions, and we've seen higher net longs coming in for this one too. And then it's not just the money managers which are buying. By the way, the central banks have been buying as well. Last year, it was a 55-year highs that the global central banks bought into gold. And the first quarter of this year is the best quarterly buying that central banks have done in last decade. So in the month of January, you had global central banks buying 74 tons. Feb was 52 tons. The March numbers are yet to come, but that is also expected to be on the positive. Let me tell you that the RBI buying also has been to the tune of 3 tons in the month of Feb, and we still are awaiting the numbers for the month of March there. banks are buying and the ETFs are buying as well. So this is the first positive buying that we've seen in 10 months in ETFs as well. Not just that, the retail buying is also coming in. So US data shows that the mint coin sales was at 187,000 ounces, which has been the best March in a decade there. For the Indian markets, because of the volatility and all-time high prices, the buying here is subdued. We actually have seen people get their old gold to cash in into those kind of gains there. And the Indian gold prices are trading at a discount of $30 to $35 right now. So India perhaps the only market which is making good of the higher prices to sell their old gold rather than buy at these levels.
Okay. All that glitters, Manisha, is?
Absolutely gold.
All right, thanks very much, Manisha, for that. Well, it's time for a quick break here. We come back and we'll be joined by the management of Ganesha Ecosphere to discuss the company's business outlook. They've commissioned a new plant in Warangal, so that and more with the management in just a bit. Stay with us. Okay, welcome back. 95 points on the Nifty. We're at 17,490 at this point in time. Things are looking quite good. Market breadth is now 6:1 in favor of advances. I mean, the only thing, though, is that, it's not a big volume-led list, at least on my screen. So just look at the kind of names which are going up. Atul Auto, it was a big mover on Monday. It's up another 6%. I think sales numbers came through for the month of March. KEI is at number 2. I'm looking at the big volume-led gainers, not absolute percentage gainers. KEI is up 6%. And then you go on to Minda Corp, LG Equipment, Vijaya Diagnostic, HOEC, and then volumes start to taper off. I mean, I can read off more names, but there are no volumes here. So even though numerically advances to declines is looking very strong, I'm just looking at the kind of names and the volumes that these names are trading. It's not big as you'd like it to be. Mitesh is with us for a quick check on things. Mitesh, we were above the 200-day moving average on the Nifty, and now we're just at it, around it. Any fresh trades?
The two buy calls, in fact, the market continues to remain strong. And while, I suspect 17,500, the 200-day average, and there's a historical gap, which was in the first week of March, is there. The structure on the immediate charts is very positive. So we're still trading with long bias. HDFC Bank is something, and both the HDFC stocks have done well. Of course, they are linked. HDFC Bank is something which has come on my radar. That's a buy with a stop at 1630 for targets of 1685. And L&T is the second stock, breaking out of a contracting pattern today. Buy here with the stop just below levels of 2200 for targets of around 2300.
All right, Mitesh, thanks a lot for joining us with that quick check on the markets. Let's also talk about some more stocks which are doing very well in trade. L&T is actually the top gainer on the Nifty right now. You also have NBCC, which is up almost 5%. Both of these on the back of some new orders coming through. Vivek is here with the details. Vivek, 7,000 crore order for L&T.
Well, absolutely right. And this is very interesting given the fact that the company has got the order in its hydrocarbon segment. So as you mentioned, an order worth over 7,000 crore in the hydrocarbon business. This is multiple offshore packages from one of the company's largest clients in the Middle East market. So again, some positive news as far as getting orders from outside is concerned as well. Now remember, the hydrocarbon business is actually housed under L&T's Energy Hydrocarbon. So L&T EH is what is the name of that particular entity. Very large order win is perking up the stock in today's trading session. NBCC, again, a significant order win for the company, a 448 crore order win, order from the Ministry of Home Affairs. This particular project is for a PMC project, a road project, and this is in the state of Mizoram.
Okay, all right. Thanks very much for that, Vivek. Appreciate you getting us those details. Now, the first management which we have on our with us right now is Ganesha Ecosphere. I mean, we don't have them very often with us, but we're lucky to have them today. Now, the company announced commercial operations at its plant in Warangal in Telangana. What does this mean for the business, overall earnings, etc.? We have Mr. Yash Sharma, Director of Ganesha Ecosphere, joining in to take some questions. Yash, great to have you with us here. Thanks very much for your time. Could you talk to us about this commissioning of the facility in Warangal? What would it, how large is this? what is the overall sort of revenues you can sort of generate from this? What's the overall opportunity?
Hi, thank you so much for having me here. So yes, basically we've commissioned, our new facility in Warangal, Telangana. So basically it's a 450 crore investment that the company has done, and we've basically ventured into two new premium products in this project. First of them being, bottle-to-bottle recycling product, which is basically a circular economy product for the packaging industry. And secondly, being bottle-to-filament recycled polyester filament yarn manufacturing, which is also a premium product, currently being used by multinational brands. So the company has invested a total of 450 crores in this investment, and we are eyeing a turnover of 600 crores from this investment right now.
All right.
Sorry, Yash, you're saying there are two products. One is a bottle-to-bottle recycling product. That's
that's
one.
correct. Yep.
Okay. So you recycle bottles and into new bottles, basically.
Correct. Yeah, that's right. That's right. Yep.
And the second is you recycle bottle into polyester filament. What you said?
Recycled polyester filament yarns. Yeah, that's right. Yep.
Okay. And you're saying that the total revenues from this facility could be annually 600 crores.
That's right. That's right.
At peak capacity, at 100% capacity.
At 100% utilization. That's right.
And by when will we see these numbers start to come in?
So we are definitely, it'll take probably a quarter or two to, stabilize the operations, but we are ramping up, quite aggressively now, and we expect that, after 2 quarters, we should be able to reach our full potential.
Okay, Yash, thanks for joining us. So you said you can see 600 crore revenue with peak utilization. What is the kind of utilization you're at right now?
So right now we've just started our operations. We're still trying to stabilize. Currently we are running somewhere between 20 to 30%.
Okay.
Yeah.
And how soon can you ramp it up?
That's what we are targeting 2 quarters basically to ramp up our productions at this facility.
What about margins here in these products, Yash?
So definitely, being very premium products and being highly in demand right now globally, if we talk about, so it will definitely be better than the existing margins that we have in our existing products.
Could you give us some sense, ballpark? No, not.
If we talk about ballpark, we are eyeing an EBITDA of around 20 to 25% in these products.
Okay. These are still commodities, though, at the end of the day, right, Yash? So,
sure. So basically, polyester in general is a commodity industry, but we are into very, very specific type of recycled PET food contact product now, which is basically, a circular economy product. Now that is, very, very difficult to manufacture. There are just a handful of organizations currently globally who are capable of, doing that product, which we have ventured into. And that's why currently, it's not a commodity product. Its availability is very scarce, and the demand is really high.
What is, sorry, can you just, I'm a novice, so just explain to us, Nilesh. You said that it's a very niche commodity. Just what is the novelty, and why are very few players in this segment? If it's very profitable, if you can explain to us. Yeah,
sure. So basically, this is a circular economy product. So what we are now doing is recycling post-consumer waste bottles back into bottles which are fit for food contact packaging applications. Now, what happens is, the decontamination process of the PET waste, post-consumer waste, into a product which is fit for, food contact is quite difficult. The decontamination efficiencies, the process efficiencies that you have to achieve, they are not easily done if you are not a really good process expert and, have really good process understanding. And, since Ganesha already being 30 years into this industry, in waste processing industry, we understand the Indian waste really well, and we have partnered with the best technologies globally to, design the process which will be capable of decontaminating the Indian post-consumer waste into food contact, properties. So that's why, it's really difficult to get this done globally. Even globally, if we talk about, there are only a handful of companies, maybe 15, 20 who can do this product. And currently it's in great demand because, circular economy is currently the world's vision. which everyone wants to achieve. This is what everyone believes is, the way of business and the way of life. And, that's why we are very aggressively venturing into this product. Yeah.
Is there government support for this line of business as well, Yash? I mean, I'm assuming with all the... Yeah.
So the government support that we've got recently, last year itself, is that, the government has come up with a regulation that starting 2025, there needs to be a minimum of 30% recyclate usage in all packaging applications. So this is what, the government has come up with in the last year. And this percentage is going to ramp up to 60% of recyclate usage by 2028. And that is where a big opportunity is being created in India.
All right, got it. Yash, if I can also, move on from just this product and ask you a little bit about the overall numbers, because we haven't had a chance to, speak with you in a while. Your sales volumes have been coming off, right, a little bit, whether I look at it on a year-on-year basis or sequentially as well. Can you tell us, is there some specific segment that you are seeing weakness in right now? What's happening on that front?
Yeah, definitely. So currently, the textile industry in general is facing a difficult time right now. Owing to factors like global macroeconomic problems, the Russia-Ukraine war issues. So there is a general difficult time that the textile industry is facing currently. But we definitely know that our product, which is the recycled polyester product, will always be a preferred textile solution. So we definitely are trying to mitigate a lot of issues currently as well.
How much does that make up for you, the textile part of it? How much does that contribute to your overall revenue?
So currently we are only into textiles. So until the last year, we have only been into textile products. So we are doing 100% recycled polyester fibers, which basically go into your apparel, clothing, these kind of applications. So until now we've been all into textiles, but starting this south facility of Warangal, we have now also diversified into packaging industry, because we also now are offering packaging solutions.
Could you, Yash, sort of put all of this together, existing in the new facility, the new products? What will F5, and you said that the new facility will reach 100% utilization in 2 quarters. What will F5 24 numbers look like on revenues and on the bottom line, EBITDA?
Yeah, so FY25, if we talk about, we can look at somewhere between 1,600 to 2,000 crore of revenues.
This is F525.
Yeah.
Okay, and what would where would you be in terms of EBITDA? Because the new business gets you almost double the margins you'd make otherwise, right? What would overall margins be?
So if you talk about a blended EBITDA margin, we are looking at we're eyeing basically a blended margin of 18%, somewhere between 16 to 18% on the total business.
Okay. So 1,600 crores in revenue and 16 to 18% EBITDA margins by F525. That's the overall aim. All right, Yash, we'll leave it there. Thank you very much for joining us, and it's good to get some numbers and an overall perspective on what you're doing, what you're trying to do. Thanks indeed. Ganesha Ecosphere with that sort of outlook. 90 points on the index. We are at 17,491. Around the same levels where we started at 11. We take another quick commercial break here. We discuss markets. Nilesh Shetty of Quantum Advisors will be with us for that in just a bit.
Welcome back. You're still tuned into Trading Hour here on CNBC-TV18. Now, we've got some interesting data that came through. Of course, remember, we have been talking so much about mutual funds, about debt funds, because of the new sort of rules that were announced on taxation, which actually takes away the indexation benefit, right? There's some interesting data that has been put together by Value Research. I'm just going to take you through that. This is about what the net inflows have looked like for debt funds in the last week of March. So they're looking from the 27th of March to the 31st, because, if you did want to get that indexation benefit, you basically to put in your money before April 1st, but that's when the new rules kick in. So just take a look at what's happened to some of the top categories. Target maturity funds. In the first week of March, we saw them, the inflows come in at around 500 crores. That went up to over 15,000 crores for the last week. Similarly, for all of them, you can see corporate bonds were at around 60 crores. This went up to over 10,400 crores. Dynamic bonds at 35 crores went up to over 3,200 crores. So we saw this massive kind of inflow that came into debt funds. Now, the fund houses that benefited the most, Aditya Birla Sun Life, ICICI Prudential, HDFC, AMC, SBI, as well as Kotak. Let's just go through the funds which have seen, really big inflows come through. Aditya Birla Sun Life corporate bond, it was in the first week of March when we saw the inflows just around 50 crores. And then by the last week, that is from 27 to 31st, when you really could take advantage of that, indexation benefit, it went up to over 3,000 crores. That's the kind of inflow that you saw. The next one is ICICI Prudential. That also saw inflows of over 1,900 crores, almost 2,000 crores over there as well. Now, if you look at the category of debt funds which saw the maximum flows come through, it was the corporate bond category, as well as the target maturity funds, which has anyway, been quite a popular category. It has been picking up slowly. Corporate bonds in itself saw over 7,700 crores of an inflow coming through. There you have it on your screen. And target maturity funds saw over 2,800 crores in terms of the net inflow for the last week of March. Now, just take a look at this last table which comes up as well. This is the AUM growth that has come through in the last week. So you had long duration funds which saw 22% growth in the AUM. You had gilt funds which were up 20%. All of this is on the AUM that we saw just for the last week. Dynamic bond funds up 12% and, so on and so forth. But that is really the kind of big push that we've seen in this category. And Prashant, people really trying to take advantage of that, 3-4 day window when they could put in their money and still get the benefit.
Although one wonders how much of this is switching from other categories into these categories.
Yeah.
How much is this pure new inflow which is coming through? But in any case, huge inflow.
Yeah, I guess, if you were sitting and you were hoping to put money into the debt category, then
you kind of brought forward your decision and did it. Well, let's go across to Nilesh Shetty, he's portfolio manager at Quantum Advisors. He's joining us now to take some questions. Nilesh, good to have you with us here. Thank you very much. Pavitra outlined those numbers. Although, now it should all normalize, right? And we should see a sharp fall in these categories with what we've already seen. What's your sense? Any perspective on this?
No, that is correct. So when we interacted with the AMCs after the regulation came in, a lot of them suggested that the kind of flows that they expect in the month of March is the flows that they got over the last 3 years, purely because of investors wanting to take advantage of this rule. You will see a sharp drop off from April onwards. So some investors who had money or cash flows that they were expecting, even say April or May, borrowed and invested right now to ensure they lock in that tax advantage, and they are happy to pay that sort of interest cost for the month, 1 month or 2 months over that period. But you should expect, again, I'm not sure whether this money will last for 3 years because nobody knows where it will be. But just to have the option value of getting that tax advantage, they would rather invest now and lose that tax advantage. But you should expect a sharp fall later on once April comes over.
I think, Pavitra, we'll get the insurance sector data also, right, shortly.
Yeah.
Those numbers should also
be interesting
bombastic, right? Should be very, very large. Nilesh, so what's the call now here on from markets? What are you telling your clients?
For us, the style that we follow primarily is value. And surprisingly, a lot of value is coming through in the BFSI space. So we've actually added an asset management company to the portfolio. We've added a general insurance company. A life insurance company is getting very interesting for us. And we, of course, have very large positions in banks, private sector banks at the moment. So irrespective of all the negativity, we are actually quite bullish on the market. You have large pockets of value available if you want to build a portfolio for the next 3-5 years. Near term, there could be challenges in some of these sectors. But if you're a patient investor, the valuation that they're trading at right now are probably sort of the lowest that they've traded in the last 10 years or 15 years. In some cases, because some of the sectors were newly listed, last 5 years, this is the lowest that they've traded at. So you have to bear sort of the next 12 to 18 months where there are specific issues in the sector. But if you're a long-term investor, then it's a great time to build a portfolio, actually.
Nilesh, we were talking about this earlier on the show as well, how so many brokerages are sort of just really sort of saying that this is a good time to accumulate money and build your positions in the market, because we have seen valuations correct quite significantly. You mentioned banks. Do you want to take us through a little bit more in terms of what you're looking at within the banks? Is it the large cap? You did mention private as well, but what would you look at within the banking space where you think, this is perhaps a good time to be putting money to play?
Yeah, for us, it's primarily valuations and the fact that they are trading at the lower end of, say, their 10-year averages or 15-year averages. Most of these quality banks. Again, I'm not sure what is the worry that the market has, given that credit cycle is about to pick up in India. Again, we remain very bullish on the capex cycle and the broader economic recovery that is unfolding in India. But for them to trade at valuations, given the quality of franchise that they've built, for us, they offer value right now. So it's just that they're trading at, say, 30-40% discount to their long-term averages. That is why they're attractive to us right now.
No, got that. Now, on you mentioned insurance, right? Did you indicate LIC as one of your top ideas?
No, not LIC. I cannot mention specific names, but we are more interested in the private sector space that in the insurance, life insurance sector. Again, the concern that market has is if the tax advantage goes away, will the sector grow? And it is not that the Indian consumer is different to the rest of the world. The rest of the world did not need tax incentives to buy life insurance. I don't think tax incentive is the reason people go and buy insurance. It's an add-on. So given where penetration is in life insurance, I think there is a structural story underway. It was priced for perfection, say, 4-5 years ago. Since then, valuations have corrected 50% in this sector. So at these levels, they do offer a margin of safety. And so within the private sector space, you can get good quality franchises right now. If you're a patient investor ready to ride out the next 1-2 years of uncertainty, you will make decent money in the sector.
Yeah. Although, I mean, if one looks at the number of growth and the number of policies sold, right, the growth has been actually pretty poor, some 3-4% kind of growth, right, over the last many years. Yeah. But stocks have also corrected quite a bit. Any thoughts on, you like banks, you said, but any specific thoughts on Bajaj Finance versus, say, an HDFC bank? Growth rates have come off quite a bit for Bajaj Finance, actually almost comparable to where HDFC Bank is. I'm talking about, the advances growth, AUM growth, advances growth actually. If you look at the profit growth also, projections are that the growth rates are converging now. Not what it used to be, between, say, 2012 and 2016-17. Valuations, though, are still very rich. Any thoughts, Nilesh?
So again, I will not be able to comment on specific names, but like I said, it's a value portfolio. So some of these consumer financing companies will never make it till their valuations correct quite meaningfully. Again, these are great businesses and we would like to own them, but that those valuations, a lot of sort of good news is already priced in. So we added HDFC Bank in the COVID crash once valuations came off quite materially, where we thought now the margin of safety is very high. But some of these consumer financing names have been very, very far away from our levels that we think they look attractive.
Right. Nilesh, have valuations corrected in any of the new age companies enough for you to look at them and feel comfortable now?
So again, we are tracking them actively. Valuations have corrected meaningfully, but we just have to build some level of confidence in the business models of these companies. So we need to get a sense of how they will generate cash flows and how they can retain those cash flows. Right now, still a lot of it is on hope, where they think they will be able to monetize whatever they've built in terms of customer database or sort of the franchise that they've built. But for us, when we model these companies out on cash flows, it's still very difficult to justify the valuations. But it is getting interesting to us. We are tracking it very closely. At some point, we might just add 1 or 2 in the portfolio.
I mean, anything, value is size agnostic, right? You can find stuff in mid caps, small caps where there's been a fair bit of damage. Anything you want to highlight, Nilesh?
So we run a very large portfolio, roughly just over $2 billion. So it's not that easy to sort of add small cap, mid cap purely because of the liquidity. Once you go below top 300 names in India, liquidity suddenly dries up. And buying in is okay. If you're buying, you might get quantity as you add these stocks. But when you're trying to exit, it becomes very, very difficult. So we have a liquidity filter. because of which mid caps and small caps do not come through for us. But within the mid cap, small cap space, there are some quality names which are priced to perfection. So adding them to a value portfolio has never made sense to us. And
I'm talking about the 101 to 300 in that group.
Yeah. Again, we've not, at the most, I think we have about 10-15% right now in that mid cap bucket.
Okay.
But we've not got any major sort of good companies and valuations that we are comfortable at. It's not that. So the good ones everybody knows, and they price it for next 10 years, 15 years in terms of earnings growth. I don't think we'll be able to buy into these companies.
All right, Nilesh, thanks very much. Good speaking with you. Appreciate you joining in, and thank you for your perspective. Well, I think we'll take another quick commercial break. We are up 3 digits, 100 points, 17,500 is where we're at. Now, tomorrow, of course, is the RBI monetary policy decision, and we'll get you what to expect from that meeting shortly. Stay tuned. We're back in just 2 minutes.
Welcome back. You're still tuned into Trading Hour here on CNBC-TV18. And an important cue to track, the main event this week is that the RBI's two-day monetary policy meeting is underway and the rate decision is due tomorrow. In fact, 90% participants of the CNBC-TV18 MPC poll see rates being hiked by 25 basis points. So my colleague Ritu is standing by to take us through all of the highlights that came through from this poll. Ritu.
Well, it looks like we're nearing the end of the rate hike cycle, but before RBI well and truly changes course, there could be one more hike in the April policy. 90% of our respondents expect that the MPC will hike repo rates by 25 basis points in this policy, taking it to a 7-year high of 6.75%. The culprit here is inflation, which remains stubbornly above RBI's comfort level. And of course, the other area of consideration for the MPC is going to be action by other global central banks, but RBI has maintained that it is guided by domestic factors. All of the respondents to our poll said that the April hike will probably be the last one in the current monetary tightening cycle, which began in May last year. The peak rates are seen at 6.75% by the majority, but after this rate hike, RBI is expected to pause for a while before it starts to reverse these hikes. So 40% of our respondents believe that we could only see cuts in the second half of this financial year, whereas a third expect the first rate cut to only be delivered in the first quarter of the next financial year. 30% expected to happen perhaps sooner. Now, RBI could also raise the CPI forecast for FY23 marginally, given the unexpected high inflation readings recently, while leaving the 5.3% CPI forecast for FY24 unchanged. Now, RBI is also unlikely to tinker with the growth forecast, although some expect a marginal lowering. Almost 30% of our respondents said they expect the stance of the policy to also be changed to neutral, but a much larger majority of 70% believe it will be left unchanged at withdrawal of accommodation because RBI may not yet be comfortable enough to signal that they are done with the rate hikes given the global uncertain outlook.
All right, Ritu, thanks a lot for getting us all of the highlights of that poll. So 90% respondents, they're expecting a 25 basis points hike tomorrow. So we will track all of that action and bring you the coverage tomorrow as well. But in fact, on this, we also caught up with Chetan Iyer of Morgan Stanley as well as Indranil Sengupta of CLSA India to get their views on what can really be expected from the policy decision tomorrow. Listen in to what they had to tell us.
RBI may not want to give it a clear signal that they are done. Most central banks around the world, RBA, Reserve Bank of Australia, yesterday also did the same. They paused, but they said that there would be a possibility that they would do more rate hikes. So I think it would be probably unlikely that the RBI gives a clear signal that this is the rate hike, this is the last rate hike. But look, in our forecast, we do think that this is the last rate hike.
We are looking at a hike tomorrow as well. We think that given where the currency is, you have to keep hiking if the Fed hikes. And then we see 100 basis points of rate cuts from October if the Fed were to stop at 5/4.
All right, that is an important opinion on how the RBI may move tomorrow on their rate decision. But with that, we are going to get into a short break. When we come back, there's lots more market action, so stay tuned for that. Welcome back. You're still tuned into Trading Hour, and for the market, we're still holding up with around 100-point gain, so looking quite steady. By the way, Godrej Consumers Q4 update is also flashing on your screen. So they're saying consumer demand trends remain quite steady through the quarter. That is, important to track from there. We are going to get some more of the comments and then put them up for you. But take a look at the auto pack in the meanwhile, because it's very split, Some of the stocks like Maruti, M&M, Eicher, all at the low point of the day. But here's something like a Bajaj Auto, which even after its weak sales has climbed, it's sitting at the top of the session right now. And that's because even after the exports were down 40%, the management is saying that this is likely bottomed out, and they're already seeing a recovery come in. So that is good commentary coming in from Bajaj Auto, which is why you're seeing that stock move to the high point of the day. But with that, we are going to wind down on this edition of Trading Hour. As we do that, here are some comments that came through from Ashwini Agarwal. So listen in to those, and thanks for tuning in. We have halftime report after this short break.
We're still above the median, but not as expensive as we were 18 months ago when we were looking at valuations in the region of 21, 22 times. So a tactical bounce, or a relief rally as the world starts to look past the rate increases and hopefully there are no further banking accidents is probably what we are witnessing right now. In terms of telecom, yes, of course, stocks haven't performed, but it's a duopoly. The business is growing. And I think, you are starting to see some green shoots in terms of, some players trying to take up prices selectively. 5G rollouts are happening in earnest. So I think, there might be some upside left there as well. If you look at IT services in India, it's fairly well insulated in terms of sudden knee-jerk reaction on demand from their customers. But if you're looking at a 3-year trajectory, I think many of the IT services leaders should be able to grow revenues in high single digits very conservatively. Margins should be maintained, and therefore, they're good places to invest. The only caution I would make to this assessment is the outlook for the US dollar.